Hi everyone, my name is Elise Finney and I'm back with another great video to show you what's done with divorce. And today I am joined by Jordan Jackson. Hi, Jordan.
Hi, Elise.
Hello. Jordan Jackson is a lender and she is so kindly joining us today. She's based out of Arlington, Virginia, and she's with Guaranteed Rate. So wanted really to bring Jordan on today just to kind of get a little bit perspective for our viewers that are going through divorce. Specifically right now, this is the end of 2022, and we're seeing a lot of, just higher increase in rates than we had seen in the last couple of years, and really wanted to ask Jordan this question. What is a good strategy when you are approaching refinancing in a rising mortgage rate?
Yeah, so generally when we think of refinancing, we're thinking of going from a higher rate to a lower rate. And when we're doing that, what we really want to look for is when you're going to break even, when you're going to recoup your closing costs. Generally, we like to see that within 24 months. If this is your forever dream home and you're never going to leave, maybe it's 30 months, maybe it's 32, but kind of 24 months or less, it's a go. You should refinance. When we're talking about clients that are coming off of a divorce or contemplating their settlement agreements in this market, they may be refinancing to a higher interest rate. And in that situation, it's kind of hard to stomach, but my best advice would be to look for the best opportunity as it presents itself. So I might put a client in an adjustable rate mortgage, understanding it's going to have to be refinanced in a couple of years before that fixed rate jumps up. We have interest only loans now. And so none of these are things that you really want for the long term, but for the short term, it's good because it can satisfy the terms of your settlement agreement. It can kind of let the dust settle of your divorce while you establish a new baseline and kind of move on from there. And then you'll refinance again. The closing costs for refi in Virginia are about 1%. So if you take that into consideration, you can refinance every year, every couple of years until we get to where it's a palatable rate for you.
Good. You can kind of weigh that out against maybe an opportunity, because obviously right now the housing prices came down a little bit. The rates went up, but maybe the housing, well, the inventory hasn't, but the housing
competitive in the housing.
Exactly. So great. One more question, just because, we're always thinking about, when you're refinancing, of course, people do often get kind of caught up in like what that current rate is. What is kind of the number one thing that a client should consider when they are rate shopping?
When you're rate shopping, you want to keep in mind that it's not always easy to compare one rate to another, right? Because there's a lot more that goes into just the number that can flash on your screen, particularly if you're looking at an online lender. Some of the details are in the fine print, and it's kind of hard to siphon through some of that information. So if you're rate shopping, I would suggest if you get an offer that seems better than the original offer, compare those. Have each lender, each loan officer take a look at the other and explain to you why theirs is better. And they need to go through and really talk about, are there fees involved? Are there discount points that they didn't disclose? What is it that makes this loan a better fit for their particular circumstance? And if it truly is a better deal, maybe then I can go to a manager and say, look, we're going to lose this rate. Can we beat it? And maybe I can get you an even better rate. So much the better. And if not, if a competitor can do better for you, I'm going to be the first to say, best of luck, you should go with them. Keep me in mind the next time you refinance, but I just can't do it for you today.
Yeah. It's always good to work with someone that's willing to fight for you, which is good.
Right.
So, well, thank you for joining us, Jordan.
Thanks for having me on.